Follow everyone, good day. One day revision for CA Foundation Accounts exam. This is the part 2 video. Let's see theory questions and their answers. Briefly explain the following terms. Question 1. Materiality answer. Materiality refers to all relatively important and relevant items, i.e., items the knowledge of which might influence the decisions of the user of the financial statements are disclosed in the financial statements. Question 2. Conservatism. Answer. Conservatism states that the accountant should not anticipate any future income. However, they should provide for all possible losses. When there are many alternative values of an asset, an accountant should choose the method which leads to the lesser value. Question 3. Extraordinary item answer. Extraordinary items are income or expenses that arise from events or transactions that are clearly distinct from the ordinary activities of the enterprise, and, therefore, are not expected to recur frequently or regularly. Question 4. Floating charge. Answer. Floating charge is a general charge on some or all assets of an enterprise which are not attached to specific assets and are given as security against a debt. Question 5. What are the importance of journal? Answer. A. Chronological order. As transactions are recorded on chronological order, one can get complete information about the business transactions on time basis. B. Narration. Entries recorded in the journal are supported by a note termed as narration, which is a precise explanation of the transaction for the proper understanding of the entry. One can know the correctness of the entry through these narrations. C. Basis of posting. Journal forms the basis for posting the entries in the ledger. This eases the accountant in their work and reduces the chances of error. 6. Differentiate between provisions and contingent liabilities. Answer. Provision. Point 1. Provision is a present liability of uncertain amount, which can be measured reliably by using a substantial degree of estimation. Contingent liability. Point 1. Contingent liability is a possible obligation that may or may not crystallize, depending on the occurrence or non-occurrence of one or more uncertain future events. Provision. Point 2. A provision meets the recognition criteria. Contingent liability. Point 2. A contingent liability fails to meet the same. Provision. Point 3. Provision is recognized when an enterprise has a present obligation arising from past events. An outflow of resources embodying economic benefits is probable, and a reliable estimate can be made of the amount of the obligation. Contingent liability. Point 3. Contingent liability includes present obligations that do not meet the recognition criteria because either it is not probable that settlement of those obligations will require outflow of economic benefits, or the amount cannot be reliably estimated. Provision. Point 4. If the management estimates that it is probable that settlement of an obligation will result in outflow of economic benefits, it recognizes your position in the balance sheet. Contingent liability. Point 4. If the management estimates that it is less likely that any economic benefit will outflow the firm to settle the obligation, it discloses the obligation as a contingent liability. Question 7. The cost of property, plant, and equipment comprises of any cost directly attributable to bring the asset to the location and condition necessary for it to be capable of operating in a manner intended by the enterprise. Give any 5 examples of such directly attributable costs. Answer. Cost of property, plant, and equipment comprise of any cost directly attributable to bring the asset to the location and condition necessary for it to be capable of operating in a manner intended by the enterprise. Examples of directly attributable costs are: Point A. Cost of employee benefits, arising directly from acquisition or construction of an item of property, plant, and equipment. Point B. Cost of site preparation. Point C. Initial delivery and handling costs. Point D. Installation and assembly costs. Point E. Cost of testing, whether the asset is functioning properly after deducting the net proceeds from selling the items produced while testing, such as samples produced while testing. Point F. Professional fees, e.g., engineers hired for helping in installation of a machine. Point G. Transportation cost. Point H. Trial run expenses. Thus, all the expenses which are necessary for asset to bring it in condition and location for desired use will become part of cost of the asset. Question 8. Money measurement concept. Answer. As per this concept, only those transactions which can be measured in terms of money are recorded. Since money is the medium of exchange and the standard of economic value, this concept requires that those transactions alone that are capable of being measured in terms of money be only to be recorded in the books of accounts. Transactions and events that cannot be expressed in terms of money are not recorded in the business books. Question 9. Periodicity concept. Answer. According to this concept, accounts should be prepared after every period, not at the end of the life of the entity. This is also called the concept of definite accounting period. Usually, this period is one accounting year. We generally follow from 1st April of a year to 31st March of the immediately following year. Question 10. What is petty cash book? Write its any two advantages. Answer. In a business house, a number of small payments, such as for taxi fare, cartage, etc., have to be made. If all these payments are recorded in the cash book, it will become unnecessarily heavy. Also, the main cashier will be overburdened with work. Therefore, it is usual for firms to appoint a person as petty cashier and to entrust the task of making small payments. Of course, he will be reimbursed for the payments made. Later, on an analysis, the respective account may be debited. Impress system of petty cash is followed. Under this system, a fixed sum of money is given to petty cashier for meeting expenses for a prescribed period. Advantages of petty cash book are: Point 1. Saving of time of the chief cashier. Point 2. Saving in labor, in writing up the cash book and posting into the ledger. Control over small payments. Question 11. Accrual basis of accounting. Answer. The method of recording transactions by which revenues, costs, assets and liabilities are reflected in the accounts in the period in which they accrue. Question 12. Amortization. Answer. The gradual and systematic writing of an asset or an account over an appropriate period. Question 13. Contingent assets. Answer. An asset the existence, ownership or value of which may be known or determined only on the occurrence or non-occurrence of one or more uncertain future events. Question 14. Contingent liabilities. Answer. An obligation relating to an existing condition or situation which may arise in future, depending on the occurrence or non-occurrence of one or more uncertain future events. Question 15. What do you mean by principal books of accounts? Answer. Ledger is known as principal books of accounts as it provides full information regarding all the transactions pertaining to any individual account. Ledger contains all set of accounts, viz. on personal, real, and nominal accounts. Question 16. What are the rules of posting of journal entries into the ledger? Answer. Rules regarding posting of entries in the ledger. 1. Separate account is opened in ledger book for each account, and entries from journal are posted to respective ledger account accordingly. 2. It is a practice to use words to and by while posting transactions in the ledger. The word to is used in the particular column with the accounts written on the debit side, while by is used with the accounts written in the particular column of the credit side. These to and by do not have any meanings but are used to the account debited and credited. 3. The concerned account debited in the journal should also be debited in the ledger, but reference should be of the respective credit account.